Good morning, and welcome to today's webcast, Navigating SOX 404A, Balance, Risk, and Budget Goals. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Hi, everyone. Sorry about that. I was on mute there for a sec. I'm pleased to introduce today's presenters from Moss Adams, Pamela Esparza, Senior Manager, and Ernesto Mero, Manager. Pamela has helped clients meet their auditing and consulting compliance needs since 2014. She specializes in business risk management and helps clients implement and streamline their SOX 404 compliance efforts, evaluate their internal controls over financial reporting, and manage their compliance and regulation and guidance changes. Ernesto has provided consulting and accounting services since 2015. He specializes in SOX compliance services and internal audit, where he assists clients in conducting enterprise risk assessments, implementing SOX frameworks, addressing material weaknesses, and optimizing processes through analyzing and re-engineering. With that, I'll turn it over to Pamela to get us started.
Thank you, Chad. So I'll go ahead and jump into the learning objectives. So what we want everyone to walk away with today is to explain the approach that we use when we help with SOX 404 compliance goals. Also differentiate between the key requirements of SOX 404A and 404B, as well as just provide considerations and some common pitfalls that we've seen if you are close to that transition or if you're currently going through that. And then lastly, we'll just quickly go over some recent and emerging changes that are impacting the SOX world at the moment. So for our agenda, I'll go through just give a background on SOX and the guidance around it. Then we'll move on to talk through the approach of compliance with 404A. I'll cover the transitioning from 404A to 404B, the considerations around that. And then lastly, we'll go through the impacts and trends that impact SOX at the moment. And if we have time, we'll go through all the questions. Okay, so the backstory, I'll start with what is SOX and the guidance around it and why it's important to understand it. So SOX it's the Sarbanes-Oxley Act, and it was enacted in 2002. So it was signed into law on July 30th, 2002, and it's composed of 11 titles. It's aimed to protect investors by improving the accuracy and reliability of corporate disclosures for public companies. And it was enacted to restore investor confidence in the capital market, which was lost at the time due to major corporate accounting scandals like WorldCom and Enron. So there was an increase in the public wanting companies to be held accountable for their tone at the top and their overall internal control environment. And one way to do that was to essentially hold executives accountable for the accuracy and reliability of financial statements, as well as for them to for management to ensure that their internal control environment is operating effectively. So going through the guidance, to summarize, I'll go through the SEC requirements, which are applicable to management, and I'm going to focus on 302, which is the management certification, and then I'll dive into 404, which is really what SOX 404 is really based on, and then I'll also walk through the PCAOB requirements, which are relevant to the external auditors. So the Public Company Accounting Oversight Board, they govern what the external auditors need to report and opine on the effectiveness of management's internal controls. So every year, essentially, the PCAOB will select a sample of audits conducted and essentially audit the audit to verify the accuracy of the auditor's work, as well as to evaluate the auditing approach and methodology that they use. So based on those findings, every year we have areas of focus that guide the upcoming audit for external auditors. So the reason why we're mentioning that is it is important for management to understand what those areas of focus are and just overall understand the guidance that the external auditors need to follow. It does help a lot when planning and preparing for the SOX year, and especially if you're moving into that 404B transition. So jumping into the SEC guidance, so Section 302, essentially it requires the CEO and the CFO to certify each 10Q and 10K that is filed with the SEC, that based on the officer's knowledge, the report doesn't contain any untrue statements of material fact or omit to state a material fact. So in other words, they are certifying that the financial statements are free of material misstatements, or that all required disclosures are included and are complete. So any disclosure, any information that you as an investor would need to make an informed decision is being disclosed and is truthful on the financial statements. They also certify that they have evaluated the effectiveness of their internal controls within 90 days prior to the issuance of the 10Q or the 10K. So just wanted to note that they're not signing off on the fact that they have internal controls or that they exist or that they're designed, but they're signing off on the fact that they evaluated the effectiveness of the controls. And so if there is a material weakness or a significant deficiency, then management is disclosing that and the CEO and CFO are certifying that. So jumping into 404, which is really most of the work that I do. So 404A, the requirement for 404A is it requires companies management to include in its annual report a report on the effectiveness of their internal control over financial reporting, or in other words, their ICFR. And 404B requires your external auditor to also give an opinion on the effectiveness of management's ICFR. So the difference between those two creates a lot of leniency, especially if you are 404A, as to what is required from you. So based on that, leniency is going to revolve around the documentation of the design of the controls and the required evidence that you need to essentially prove that your controls are working effectively. So that compliance can range from the minimum that we will see is you can have a questionnaire listing all of the internal controls, and management just signs off on their internal controls saying that those controls are effective. And so the thought process behind that is that management can rely on their knowledge and day-to-day operation of their controls to be able to sign off and say that the controls are effective. Any additional work above from that, it's really going to be dependent on management SOX plan and timeline. So some things to take into consideration is the timeline to 404B. So the closer you are to 404B status, then the shorter the runway you have to being fully compliant. Also take into consideration your budget, your headcount at the moment, and also take into consideration your IT environment. Take a look at your ERP system, see what it can do, what it cannot do, and what is your IT support infrastructure. So do you have an internal IT department? Do you use an IT consultant, or are you currently in a place where finance and accounting is also essentially the IT department at this point? Another area of flexibility is the completeness and accuracy and verification over key reports, which I'll cover in more detail in a little bit, but essentially any reports that are generated from the system or any manual spreadsheets that you create, those are all also subject to management verifying the completeness and accuracy of those reports. So the theory behind that is essentially garbage in, garbage out. So if your data is incomplete or inaccurate, then essentially your control is not effective if you're using incomplete or incorrect data. So with what I just talked through, when you're 404A, you do have a lot more flexibility as to the amount of work that you need to do to be compliant with all of that. Once you go into the 404B space, you're getting a lot closer to that. A lot of that flexibility turns into what would be required of you. So closer to 404B, you need more extensive design documentation. So you would need to have, flowcharts or narratives, you need to have RCMs, and extensive documentation around the evidence of the effectiveness of your internal controls. So there's going to be more of an emphasis on inquiries, observation, inspections, and reperformance of what management did, which would result in more review checklist or documented and dated sign-offs and approvals, a lot more tick marks, review comments, and then retention of all follow-up efforts. And I'll go into a little bit more detail on that, but essentially the external auditor needs to be able to come to the same conclusion that you did. And the way that they can do that is by being able to inspect something or being able to reperform something. 404B compliance costs increase because there would be more scrutiny around the level of detail that's required for the external auditors. So as you go through your SOX journey overall, we just really want to encourage you to work with your internal audit department or SOX compliance service provider when drafting a timeline and compliance plan. So if you are trying to determine if you're 404A or 404B or need more guidance as to how much time you have before you are subject to 404B requirements, we do have this table that is available in our presentation and on our website. What I want to highlight from this is that in 2020, the SEC did issue new guidance, which essentially brought in the idea of a small reporting company or an SRC. So if you fall under that umbrella, you are 404A and you do have a little bit more of runway before 404B, and it can apply to different scenarios. So even if you have the EGC status, you're 404A and that's about to expire, there is still a possibility you would qualify for as being an SRC and you would still remain 404B. And on the other side of that, you could be an SRC and depending on your public flow or your annual revenues, you could very quickly ramp up to that 404B status. So just keep that in consideration when planning out your SOX timeline and compliance efforts. With that, I will pass it over to Chad for our first polling question.
Thanks, Pamela. So our first polling question for the day, what is your current requirement for complying with SOX? A, we are still private, so we don't have to comply with SOX. B, we are still private, but our IPO timeline is 24 or 25. C, we are currently only subject to 404A. D, we will be subject to 404B in 24 or 25. Or E, we have been subject to 404B for years. So I'll give you about 15 to 20 seconds to answer this first polling question. And as a reminder, please select your answer and hit the submit button for it to be recorded for CPE credit. All right, we're getting to about 80% here, so I'll give you about 5 more seconds to answer this polling question. All righty, we're going to move it on to the results.
Thanks, Chad. So you can see there is quite a bit of a spread with everyone that's attending, but it looks like about 50% are still private and don't have to comply with SOX. If you do plan on going public, and we've worked with a lot of companies in this area as well, just also keeping in mind that those SOX requirements and the flexibility that you have with 404A and everyone else who is still 404A. Just taking into consideration, the timeline you have to 404B, which we'll cover in more detail and really help you tailor your SOX needs. Okay, so moving into the SEC guidance, so section 404. Again, the requirement is an annual assessment must be performed by a party that is both competent and objective, independent of external audit. So really the takeaway from that is if you are subject to 404A compliance, you can't rely on the external auditor to tell management if your controls are effective or not. So management does have to perform some kind of assessment. And as I mentioned earlier, the minimum can be a questionnaire, but we based on your budget, your headcount, the situation you're in, that can definitely vary, and you can definitely do a hybrid of the testing approach that we take to make sure you are compliant. So management must establish and document the design of internal controls over ICFR, including entity level controls and especially IT general controls. One area that I typically see that needs a little bit more TLC at times is the ITGCs, and the number one area to start with, especially if you're in a space where you currently don't have any controls or you're currently working on designing those, is to focus on the access and the change management areas. So who has access to your system and who can actually make changes to the system, and any changes made, were those tested before being moved to a production environment? If not, can you go back and verify that those changes were valid? Some consideration, evaluate the internal controls to determine if they're in place and operating as designed, which I've already covered. So some considerations for determining the extent of procedures, especially if you are 404A. So how much testing is enough and how much is not enough. Take into consideration your current ICFR environment. So do you have any deficiencies, any misstatements? Do you have any areas that you feel are higher risk? Or that maybe need a little bit more attention, and definitely communicate those to whoever is helping you with your SOX compliance efforts. Also take into consideration that 302 certification that I mentioned earlier. So what is the comfort level that executive management needs to be able to sign off and certify that your internal controls are effective? So again, going back to that questionnaire, it might be enough. It might not be enough. Maybe your operations are changing, or there's definitely areas, as management knows more than anyone, the areas that probably need a little bit more attention or that they've had issues in the past. So take into consideration those areas, as well as your 404 compliance timeline. We're going to be covering this a lot, but that is very important to take note of, and take note of the nuances to transition. If you have the time, take advantage and ramp up your internal controls at a pace that works for you and your business. And then also take into consideration the budget that you have, that you're able to extend to your SOX efforts, as well as the headcount that you have. It is possible to be fully compliant and have a great internal control environment, just having 2 or 3 people in your accounting team. Okay, so moving into the PCAOB guidance. So this is the guidance that is applicable to external auditors. So regardless of 404A or 404B status, as a 404A organization, if you're looking to grow and expand on your business, you will likely eventually fall into that 404B environment. So it's important to just take note of what the auditor requires, and that can really help you streamline what your transition would look like. So AS 2201, it requires the auditors to focus on risk and materiality, which is where that top-down approach comes. So by taking this more risk-based approach, the auditing standard has auditors focus on internal controls that relate to higher risk and material accounts within the organization. So typically when we help organizations, we take the same approach. So the materiality likely will not be the same as the external auditor, but the processes and the systems that are in scope should align with what they consider in scope as well. The testing of controls includes guidance and what testing procedures are appropriate, the nature, the timing, and the extent of the controls to be tested. So it dictates what the auditor needs to look at. And then lastly, it provides guidance on evaluating identified deficiencies, including indicators of a material weakness. Parts of AS 2201, so these were previously known as AS 11 and AS 15, and I believe in 2017 it was all combined into AS 2201. But essentially the PCAOB came out with guidance based on their findings, stating that there needs to be a greater emphasis around management review controls and information produced by the entity, so IP or key reports. MRCs are controls that have a greater amount of judgment and or complex estimates related to that control. So we listed a couple of examples on the slides, but typically the control that we immediately think of when we think of an MRC is typically those budget to actual analysis or those flex analysis that you do. These controls, essentially why they're considered an MRC, is you do need knowledge of the business and operations to determine if those fluctuations make sense. So when these controls come into play, the external auditors are required to obtain support for those types of judgments and evaluate if the level of precision for the control could prevent or detect a material misstatement on a timely basis. So a lot of the questions around those are going to revolve around the objective of the review, the level of aggregation, the consistency of performance, the predictability of expectations, and the criteria for investigation. So what that's going to look like is a lot of questions of, well, why did you choose this? How do you review this? What do you consider material? How would you follow up on that? The questions are around those areas. And then IPE, so I will cover this in a little bit more detail also later on, but IP essentially can be anything that is a system generated report or a manual spreadsheet. And what management is required to do is to verify the accuracy and completeness of those reports. Again, it's that garbage in, garbage out theory. So if the report is system generated, management and internal audit, they need to test the logic of the queries or the parameters used, which is, again, where those IT controls are also going to come into place. Management should also perform and document the review of completeness and accuracy. So if you are in a 404A state, you do have a little bit more leniency and flexibility and time to get adjusted to being able to consistently document your CNA review of that. However, if you are 404B, it is a requirement and it is something external auditors are going to be testing and looking for. And your SOX testing strategy should be based on the characteristics of the data and reports. So 2 important things to think of when you're looking at IP. 1, is it user or system generated? And 2, is it modifiable or non-modifiable? So for example, an accrual spreadsheet, we would consider that a manual report, and you likely would have different ways to verify the completeness and accuracy over a system that might be generated and is being printed in PDF, and you might be able to rely on the SOC 1 if your system has a SOC 1, or for example, if you have something like a fixed assets addition listing that you're grabbing from the system, it's an Excel, there obviously needs to be more procedures over that, over something that you would print that's in PDF. So maybe you're tying it to the GL or your fixed asset roll forward. So just wanted to note that based on the report and those characteristics, then your procedures over CNA would vary across those. And then lastly, just to quickly cover the internal control framework. So the SEC requires an internal control framework, and what we typically see and what we use is the COSO internal framework, which is the most widely adopted SOX 404A framework in the United States. For SOX 404, the emphasis is on the financial reporting and compliance objectives. It is a very useful tool. It's extremely useful in helping design your entity level controls, as well as just a starting point to help you verify that the rest of your business process controls and your IT controls are also in line with your internal control framework. And with that, I will pass it over to Chad and Ernesto for our next polling question.
Awesome. Thanks, Pamela. And our second polling question for the day: how does your company currently manage your compliance requirement for SOX? A, we have an in-house internal audit function. B, a third-party consultant. C, various individuals of management assess our compliance. D, we co-source our compliance by using a third-party consultant and doing some in-house. E, not applicable. My company is not subject to SOX for the current year. So we'll give you about 15 to 20 seconds to answer this polling question. And if you just select the correct answer or select your answer and hit the submit button, it will be recorded today. All right, looks like we're about 85% here. So I'll give you about another 5 seconds or so. All right, I'm going to move it on to the results here. Pass it over to you, Ernesto.
Thank you, Chad. Okay, before I continue, we'll take a look at the results. And okay, it looks like a lot of people have an in-house internal audit function. And then the majority of participants are not subject to SOX, and looks like they do not have an internal audit function. Okay, so I'll move on to the next section. And all right, so the focus of our next section is really taking the guidelines requirements from the SEC and the PCAOB that Pamela discussed and tying those into your approach in SOX 404A compliance. We'll start by talking through the framework. Okay. And we've discussed the SEC requirements a few times and the approach by simply taking the 4 SEC guidelines listed right here on the slide on the left and breaking them into discrete actionable processes which occurred during the year. And that's right here, the compliance approach on the right. And yes, we will go through these in more detail on the subsequent slides. The manner in which you perform and document these actions will be dependent on the organization and specific considerations. And as you see on the slide, the requirements translate into, I want to say maybe 4 steps. First, assess risk, establish internal controls and document the environment. And again, establish internal controls and evaluate the control environment. And attestation occurs quarterly, and these are the 302 certifications that Pamela previously discussed. Okay, and now we can, in the next slide, we'll talk through some considerations to think through in balancing compliance requirements with the cost, level of effort, and then the details and approach. So we're really balancing cost, effort, versus being compliant with 404A regulations. There is no one-size-fits-all detailed approach to 404A. Factoring in these considerations for your organization will help you determine the path and approach you take. On the next slide, we'll show different paths for being compliant, which will clearly demonstrate the more the organization wants to ensure they're compliant with 404A regulations. Typically, the higher the cost and level of effort. Well, good. We can go over the considerations. First one is, what is the maximum risk that management is willing to take to have a material misstatement in their financial statements? This is the risk tolerance. And when considering the risk, it's important to think about the affected parties, the stakeholders, board of directors, audit committee members, and what is their risk tolerance. Additionally, the executives who are required to certify at the end of the year, the CEO, CFO, COO, their risk tolerance, and what do they need to have to gain comfort over the design, operating effectiveness of internal control structure to certify at the end of the year. And how close is a company to being required for 404B? Organizations knowing that they'll be an accelerated filer soon due to increased public float or revenue, it may be wise for them to consider inputting or including more effort into SOX. And then we have industry-specific compliance, industry-specific. So if you're a manufacturing company, you'll have additional risks around inventory, and the application of cost of accounting can be very important. But if you're maybe banking, those regulatory compliance factors will take on more weight. Which brings us to thinking through the control environment, the existing control environment. Are there controls already in place, or does management have to implement new controls to get an acceptable level of risk? And if you have performed a SOX readiness assessment, what were the results? This is all important when planning your approach. So companies need to understand their risk tolerance to determine the level of effort to put into SOX compliance. Which brings us to our first step of the approach, is the risk assessment. So we start with the assessment of the control environment and the key controls in place. Important to think how this planning will set the foundation for year's activities leading to attestation. Some of the considerations are who performs the assessment. Will it be internal audit, third-party consultant, management? The who is the largest cost. What does management consider high risk? This could be industry specific, but areas that are material, require judgment, are considered high risk. As Pamela discussed, those MRC controls, some of those higher risk processes dependent on the industry. What factors, frameworks are used in determining and assessing risk? The factors can be industry specific and organization specific, taking back our manufacturing compared to banking. Of course, those two different industries will have different risks and different factors. And the framework you are utilizing, generally we work with the coastal framework. This is the most common in the United States, and this is the framework that we generally work with. And now that you've factored the risk, the approach is the method of documenting. Either utilize a detailed risk-based approach, utilizing prior period financials, financial statements, financial data, or financial data and a forecast of financial data. You can perform a risk assessment or a simple risk assessment memo. Again, one is a low versus a high level of compliance approach. And which brings us to our next slide, is balance compliance efforts versus cost. At this point, you understand your organization risk and risk tolerances of the stakeholders. Cost will be used on the level of compliance corresponding to the company's risk tolerance. On the vertical axis, you have cost and level of effort. Horizontal compliance, starting with low level compliance, low cost, going all the way up to high level of compliance. At the low end of the spectrum, the bare minimum. Don't expect to be compliant with 404B. Management is either really confident in their controls or there is no expectation of revenue or public float triggering 404B. At the low level, you have management assessment memo, questionnaires, zero transaction testing. And on the other side of the spectrum, we have the high level of compliance, full scope. This happens when companies are looking to be compliant with 404B, is where you need to understand what external auditors are looking for when they are performing their testing. Companies ensure robust documentation and testing around those key areas external auditors are looking for. So we have the detailed risk assessment, full scope testing, documentation and narratives, flowcharts, RCM, operating effectiveness testing, concentration around those levels that auditors are looking for, as Pamela previously described, MRCs, IPE, remediation, 302 certifications. And in between the low and the high, the most common hybrid approach. Companies document controls in a more detailed level and perform limited testing. The focus being on high-risk processes. For example, management companies would focus on inventory and cost accounting, or maybe a biotech company would focus on clinical trials, R&D accrual process. So in the hybrid approach, targeted testing around those higher risk processes and 302 certifications. The 302 certification is common among any approach, low to high. Okay. All right, and brings us to step 2 of our approach, considerations that will help drive the appropriate deliverable. And approach includes thinking through the considerations, who owns each process? Does the individual overseeing the process understand SOX reporting requirements and operational procedures? Key to making SOX compliance land is getting the team members, those control owners, on board with SOX, because the level of effort is maybe something they're not used to, something that goes beyond simply performing the control. Management should consider the volume of controls, how many key controls. So management's level of competence in the internal control structure will dictate the amount of key controls and the need, if there is one, to establish more. And systems, this one is critical. What systems are used in control performance, and what is management's confidence in the effectiveness and accuracy of the systems, data, and reports? So there are several ways internal controls can be documented. Let's talk through some of these as we have found in a 404A environment, especially a first-year recipient. This requirement can take a significant amount of time. And we'll go through some of these documentation examples. First one we bring up here is a process narrative. Some pros to a narrative are detailed description of the process. It includes controls, risks, control owners, a little bit more detail around the process and the steps through each of these. Some of the cons are, though, that it is time intensive to create, requires a lot of effort, and also it's time intensive to update each year. And it's hard to get people in here to update this. And of course, it doesn't necessarily fulfill the audit requirements on its own. Next common documentation method, flowcharts. It's a visual depiction, includes the risks, controls, and in between that, some steps of the process. It's generally less costly to identify or less costly to prepare. And some of the cons are, though, that this can be complicated to understand if you are not familiar with the process. And also that this will not potentially stand alone. You may also need some narratives to support some of these processes. Okay, and our next form of documentation, the risks and control matrix. The RCM outlines the details of key controls, yet typically this accompanies the narratives or flow charts, and there isn't typically sufficient operational detail to understand where the control fits in within each process. So typically what we'll see is a combination of an RCM with the narrative, or RCM and narrative, or RCM and flowcharts. Maybe for some of these higher risk processes, maybe all three: narratives, flowcharts, RCM, just to provide adequate documentation around each process. Okay, and I'll hand this over to Chad for the next polling question.
Thanks, Ernesto. We have our third polling question for the day. What documentation do you currently have in place to describe your processes and identify key controls? A, process narratives. B, flowcharts. C, both process narratives and flowcharts. D, risk and controls matrix. E, neither. We use something else. So we'll give you about 15 to 20 seconds to answer this polling question. If you just select your answer and hit the submit button, the question will be recorded. All right, we're about 85% answered here, so we'll give you about 5 more questions, or 5 more seconds for the remaining. All right, let's advance it on to the results.
Okay, let's take a look at the results. So looks like a lot of participants use both narratives and flowcharts, which is great documentation, very detailed. Some of them are using process narratives only. I got 12% that use something else. Okay, can move on to the next slide here, and the assessment of internal controls. Okay, so now it's time to assess how the controls are performing. Notice here the considerations are more the items to think through when determining the approach to take and method of documenting. No surprise here that the assessment will need to be done by someone who is both objective and a competent party. As far as the deliverables go, you have the low-level effort, control questionnaire, typically yes or no questions prepared by management and the control owners. Is the control still in place? Has the control changed? Has the control owner, performer changed? And we also have the high level of effort, testing, full operational effectiveness testing with full sample sizes around all key controls. Companies close to 404B requirements would likely implement this approach, including MRC testing and documentation of IPE and management's completeness and accuracy procedures over that IPE. And then again, in between the low and high effort approaches, we have the hybrid approach, which is a little bit of both, concentrating on high risk areas and focusing your efforts there. This is what we typically see with our clients. You can perform more targeted testing by reviewing these high risk areas. Important to consider, testing would be especially important if there are quite a few new implemented controls. And yeah, now that we've assessed our controls, we can perform the attestation. Considerations for attestation to the effectiveness of controls ties directly back to what does the CEO and CFO need to be comfortable to sign off on that dotted line. And remember, management is accountable for investor confidence. There isn't much flexibility here. Those CEO, CFO will need to sign off on that 302. there's a way to lower the risk around this is to perform sub-certifications from another layer of management that's closer to the controls to get their certification as a way to lower the risk, followed by the 302 certifications performed by the CEO and the CFO. And this wraps up the 4-step approach. I'm going to go ahead, hand it off back to Pamela, and we can go through the transition from 404A to 404B.
Thanks, Ernesto. So I'll be covering some considerations and some areas, pitfalls that we typically see when it comes to transitioning. So again, the requirement is that the biggest difference is the external auditor is going to also be looking at everything and giving an opinion along with their usual opinion over the financial statements. But it's going to be an integrated audit, right? So they're going to also have to give an opinion on the effectiveness of management's internal controls. So what does that look like, and what changes do we typically see from being 404A to 404B? So the first change we see is definitely starts in the beginning during the walkthroughs. So there's going to be a lot more thorough walkthroughs than your typical test of one if you are a private client or if you have been subject to 404A walkthroughs. So there's going to be an emphasis on those management review controls that I walk through, a lot more questions around it, a lot more scrutiny on the position and what very specific questions on how you perform your review, as well as walking through the control evidence. So a lot of questions of, well, how can, if these are your 5 review steps, how can we as auditors verify that that was actually performed, as well as the walkthrough over those IP and key reports that we mentioned as well. So the biggest change is management just really needs to document, and that's going to be a theme you'll see in the transition. It's just a lot more documentation that needs to be done. So there's also going to be an assessment to identify design deficiencies. So any financial reporting risks that are unmitigated, there's no control that would stop this risk from actually happening. So ideally, if you have already been working on your SOX compliance plan and you've been 404A, even if it's 1 or 2 years or a couple of years, hopefully all of the design deficiencies, whoever you're working with for your SOX compliance efforts, have already been identified, but there is the chance that there might be more identified by the external auditor. And so the expectation is that management will mitigate these design deficiencies timely, which usually results in adding additional controls or just modifying the current controls and tweaking them so that you're able to address those risks that the auditors might have. There's also going to be an increased testing. So what that usually means is there's going to be more samples. So you're going to have your usual samples that you have for your financial statement audit. And then, if you have the RCM, as Ernesto mentioned, and you have 80 controls on that RCM, just take into consideration the external auditor is going to need to pull samples for each of those 80 controls to verify that they are operating effectively. There's also an increase in just overall documentation to evidence and support management's assertions that the controls are effective. So it's going to be those review checklists, documented and dated sign-offs. The dating is very important. Just more documented tick marks, more comments. We just need to be able to see what was reviewed and what was looked at, and then retention of all follow-up efforts. And what that means is if you have a threshold on your reconciliation, anything over 20,000, we need to look into. If there are any variances, any $20,000 or more variances on the reconciliation, what needs to be documented is if you sent an email trying to figure out what that difference was, that email needs to be kept. or you can comment on the reconciliation, but there just needs to be evidence showing that it was followed up on and what the resolution was eventually. There's also going to be a full assessment of IP and key reports and MRCs, which I already mentioned, and just an overall increased cost of compliance. Some other considerations. So what design documentation has been developed, everything that Ernesto just walked through. So if you, as 404A, you're not required to have flowcharts or narratives. We highly recommend you do, but you're not required. Once you reach that 404B status, it will be a requirement. What processes are currently in scope and assessed on an annual basis. So it just, again, make sure you're aligned with what processes will be in scope, what systems will be in scope. And just before you get to that 404B stage, just make sure you're really taking a look at those and scrubbing those. Have test plans been developed? Again, what level of documentation do you currently have? That really needs to be extended as you get closer to 404B. If there's any areas with recurring deficiencies, try to mitigate those before you get to that 404B status, and really take into consideration in this area any segregation of duties. Conflicts that you might have, we really recommend to do an SOD analysis before you get to that 404B status and give yourself enough time to mitigate those as well. And then just overall coordinate with the external auditor before you get to that 404B status. And then some common pitfalls. So failure to maximize that ramp up time prior to transition. If you do have that ramp up time, fully take advantage of it and go at a pace that you are comfortable with. So when you do get to that 404B status, it is a much smoother transition. Lack of senior executive or board support, we don't typically see that, but just make sure you're on the same page with your audit committee and the executives and management all understand the expectations. The next couple of bullet points. So using a checklist approach versus a risk-based approach, or over-engineering or confusing something that is operationally key with something that should be a financial reporting controls. So the three of these all go hand in hand, essentially saying that there are a lot of things that you need to do to keep your business running, which is your number one priority. However, not all of that needs to be in scope for SOX, especially if it's, for example, performance evaluations. That is something that is key operationally and should be part of SOX. However, if you have a policy where not 100% of your employees need to complete your performance evaluations, then just make sure your controls are designed that way so that it's not a failure. If we're operating under the assumption that this is your control and it's key and 100% of employees should do it, and we select the sample and a couple of them didn't complete it, that control would essentially fail. And now you have to worry about the mitigation around it. So there are ways to exclude certain controls that are key operationally, while still keeping controls that are key operationally, but just designed from a SOX focused perspective. And then lastly, infrequent and superficial coordination with the external auditor. As you get closer to that timeline, definitely cooperate with them and communicate what their expectations will be. And I will pass it over to Chad for the next polling question.
Thanks, Pamela. And our fourth polling question and final of the day is, what is your organization having a difficult time implementing regarding SOX? A, balance efforts to design and implement internal controls with current headcount. B, documenting processes and internal controls. C, monitoring the operating effectiveness of internal controls. D, establishing procedures around the completeness and accuracy of IPE and key reports. E, transitioning to 404A or 404B, or F, other. I'll give you about 15 to 20 seconds to answer this one. All right, give you about 5 more seconds. All right, we'll advance on to the results here.
Okay, so difficult time balancing efforts to design and implement with current headcount. That is the biggest hurdle that we see. And again, SOX does take a lot of resources. But if you do have that ramp up time, or if you plan on, having your IPO and you're going to have that 404A status for a bit, really take advantage of that time to start implementing controls so that you know where you're currently standing and you know where you need to be at and by when you need to be there. Documentation, that also takes a while, and pretty much everything. Yeah, IP also, we see that quite a bit, especially with 404A status. And that's typically also the last thing we see implemented as you get closer to 404B. And then again, the transition and the other. Feel free to put in the comments or the questions what those are, and we can also talk through those. Okay, lastly, emerging trends and focus areas. So there is a webcast that was done by Erin Clavel and Max Jasper back in September for us, and if you go on our website, you can find it. But they went through very intense detail on all of these. But what I wanted to highlight that has been key and has been a focus this year is the new cybersecurity ruling that came out. So essentially, you will now be required, effective anyone filing after December 15th of this year, you are required to disclose cybersecurity risk management strategy and governance. On your 10K, you need to have a process for identifying, assessing, and disclosing cybersecurity incidents, and you need to have a process in place to track individually material-related incidents over time. So you might have a couple of non-significant events that don't need to be disclosed, but you do need to be monitoring those to make sure that they don't get to a level that in the aggregate they should have been disclosed. Okay, and then lastly, practical application, just a couple of bullet points to summarize, but in the interest of time, we just want to highlight that every company is unique when it comes to risk tolerance, industry demands, and considerations involved in its compliance efforts. So just really make sure that your SOX program and timeline is tailored to your needs, and whoever you're working with on those efforts, that they're also customizing and tailoring and meeting those needs. With that, we do have some additional resources that we really recommend to take a look at related to our topic. And here is mine and Ernesto's contact information. If you have any questions, please feel free to reach out. We're happy to hop on a call or send a quick email back. And any questions that we didn't address in the chat, we'll also take the time to address after the webcast.
Awesome. Thank you, Pamela and Ernesto, for a great presentation today. Like Pamela said, if we didn't have time to answer your questions, we'll do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certification is available for download now in the CPE progress window. I'll keep the webcast open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks should you have any difficulty downloading it now. And here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this, as your survey is very important to us. Thank you for joining, and we hope you'll join us again next time.